It is Monday, and that means it's time for the Real Estate Show. We go live every single Monday at 12 o'clock Eastern Standard Time to share how you can build your real estate portfolio. And today we are talking about how you can find the very best real estate deals and make sure you're going to be able to maximize your profits, but also minimize your risk. Because there's no point in getting into a bad deal and just ending up with a whole lot of nightmares. You want to make sure when you're acquiring a deal, adding to your portfolio, it's actually going to bring something positive to it in the name of cash flow and profit. So today we are bringing the man, the myth, the legend, the guy to talk to about real estate and finding deals. None other than our Director of Acquisitions, Paul Hopkins. Let's bring Paul on. And Robbie, you'll have to jack up the volume so I can hear Paul. Okay, how's it going, Paul?
Great. Good morning. How are you?
Hey, I am well. So, Paul, you are the Director of Acquisitions at CPI. You are the man in charge of finding deals, making sure they are, they meet our requirements and everything. So you are the best guy to talk to on this subject. So maybe just to start off, can you just maybe let everybody know like what your role is and the big things that you're in charge of, and then we can get into the other stuff.
Yeah, absolutely. So I'm the Director of Acquisitions at CPI Capital. And basically my main focus is finding all the right deals, analyzing those deals, and then executing on closing. I'm also the Director of Asset Management. And so, it's my job and responsibility. So, I work on the business plan and the estimate for, how we're going to acquire this deal, and then making sure that we are executing it properly once we close on the deal. And, the hard work is actually on the opposite side when you're asset managing the deal and making sure that you're meeting your business plan or exceeding it. So that's my day-to-day responsibility with their CPI.
That's awesome. And one of the big questions we get all the time is, maybe it's somebody just getting into real estate or they're looking to level up their portfolio. They're like, okay, well, I want to get into multifamily or some bigger deals, but then they still think they have to go to, realtor.com, Zillow to find the deal. So, how do we at CPI, and like, what's your strategy to finding the best deals out there that will actually pencil out?
Yeah, so it really comes down to a network. And what, just to kind of give you an example, when we stepped into Florida is a market that I wasn't particularly familiar with when we first started looking at Florida. So we did our research, we understood, at least what was going on with basically what I call the 6 essential factors. So you got job growth, rent growth, population growth, median household income growth, overall stable economy. You've got, it's a landlord friendly state. You've got employment, you've got good education, which is an inverse relationship to crime. And then, so understanding all those different essential factors when you're looking at each of these different markets. And then from there, we started to establish basically our network and reaching out to all the brokers that are in each of those markets that we were focused in on in Florida. Having one-on-one Zoom calls, getting to know them, getting to know basically what they focus on, because not every broker or broker firm focuses on the type of deals that you're specifically looking for. And so we narrowed down, like a list of probably the top 15 different broker firms, and narrowed it down to like maybe 5 or less within each market that specifically works on the type of deals that we're looking for. And then subscribing to basically their buyers list. So every time that there's a deal, making sure that we're getting access to those deals. And then, understanding the market and understanding, what's happening, what's particularly with that deal, why is the seller selling those deals? But then it also involves like property tours and market tours. So, when we decided on Florida, we spent a long time basically establishing all our connections and network with all the brokers there. But then we also flew down there and met them one-on-one, toured a couple of the properties that, we're roughly within our criteria, just to get a better understanding of like what are the tenant demographics for these areas, what are the tenants looking for, because you may have like a different appetite for finishes in, say, Florida versus Indianapolis, or in Cincinnati. So you got to have a better understanding of like what the tenant is looking for, but then also working with property managers that are in those markets too, that better know the tenants and the demographics. So it really comes down to, when you want to find those good deals, it's really networking and building those relationships with all those brokers that are dealing specifically with the type of properties that you're looking to buy.
Yeah, and one of the big shifts I think a lot of people have to go through is, if they're experienced like a lot of people are in the residential investment space, there you find a real estate agent, they'll show you a whole bunch of different properties, you find one, you put an offer in, and you're working with that buyer agent. On the commercial side, Paul, just give us an idea, like how many times do we go direct to the listing broker? Like if there's a percentage.
Yeah. So, we don't have basically a broker that represents us as a buyer. So we're going directly to the brokers that are listing each of these properties. We could definitely work with brokers, but for what we're looking for, everything that we ideally need, we already get that information directly from the broker that's selling these properties. And it's like, even if you wanted to have like an off-market deal, you need to actually work with the brokers that have the relationships with these sellers. And then being able to provide you with a listing before it actually goes out to market, which is known as the off-market deal, right? But yeah, you're dealing directly with the seller's broker.
Yeah, for sure. And there's a lot of benefits to that, right? Because you're hearing the news directly from the horse's mouth, so to speak. There's no breakdown in communication. You're dealing directly with the person who has access to the seller. So, when you switch over to the commercial side of real estate, that buyer agency agreement that most people understand in the residential world, it doesn't work the same way. Actually, Paul, you are running a free workshop, a free masterclass tomorrow night on how to analyze and underwrite deals on the analysis side. So, Robbie, can you put up the link right now? So if you're listening right now and you're interested in having an hour with Paul, breaking down exactly what he looks for, how he analyzes deals, maybe Paul, I'll throw it over to you and you can talk about it a little bit. But Robbie just put the link up on the screen for you.
Perfect. Yeah. So what I'm going to cover tomorrow is, I could spend hours and hours teaching somebody how to analyze a deal. And it really comes down to repetition, continuing to analyze multiple deals over and over and over, just to start to see like overall trends. But what I'm going to be covering tomorrow is, the basics. What are some of the things that you want to look for, some of the red flags that might come up in your underwriting? And, I'm going to actually cover like how to quickly analyze a deal in less than like 10 seconds versus, like maybe, taking a little bit deeper of a dive in analyzing a deal in less than 10 minutes. But then, I'm not going to cover it on the webinar tomorrow, but what I am going to provide is basically a video of which I recorded me doing a deep dive analysis into a property that we recently acquired, and going through my full underwriting and basically walking through each step of how I analyze the deal and things that I look for and how to, pull these different levers in order to get different returns that we're looking for. So I'm going to be covering a lot of ground tomorrow, and happy to see everybody there and provide, hopefully some good value for everybody.
Yeah, for sure. Because we talk with a lot of different investors from all ranges of the spectrum, from brand new to experienced. And the thing that stands out to me is, how many people right now are putting in offers on deals and trying to get deals done when they don't really have any solid underwriting. They haven't done the numbers the right way. And so they're just going in on a napkin and a prayer basically, without actually understanding how the mechanics of the deal will work once they acquire the asset. So, Paul, maybe you can just walk us through maybe like some of the three biggest mistakes you see people making right now in today's market when it comes to analyzing deals, looking at them, and how we might be able to improve that.
Yeah. So I'll give you some examples. So like when we first started looking into a new market, and we're kind of testing the water, so to speak, we didn't go in, so aggressive on our first offer. We did the steps that we needed to do. We did the underwriting. We reached out to property managers. We got their feedback. We reached out to lenders. We got their feedback, insurance companies, and getting their feedback and plugging all that information into our model, and taking a very conservative approach and discussing this offer, at least our underwriting, with the seller's broker, and say like, hey, are we in the right ballpark? What are some of the things that we're missing? In different markets, you're looking at, there are different ways to, increase your NOI. Some markets, they have valet trash, other markets, they don't, and these are the things that you're going to find out as you do more and more of these deals. But what I would recommend is when you're starting out is establishing a team of people that are familiar with that market. And it could be these brokers that you're dealing with. But you definitely want to have a property manager on board and in discussing these deals with them. You want to have an insurance company that's basically providing you some overall feedback, and then a lender. So these are people that are key to your team that they will review the deals with you and make sure that you're within the right alignment before you go back to the broker and kind of share these details. So really what I recommend most is like establishing a team in that market that knows these properties, knows these locations better than anybody.
Yeah, and the last thing we want is for somebody to look at a deal, not understand the way the deal's really going to work. They acquire it and then they get into trouble. So sometimes, we'll see people, maybe we'll lose out on an offer. Somebody buys the property and we're all scratching our heads being like, oh, well, how are they going to make this deal work? And sure enough, the person gets in trouble because they haven't done the work up front. So just walk us through who would benefit from your underwriting masterclass coming up tomorrow night? Like what kind of people would it benefit?
Yeah, really, it's a huge range, I would say. People that are just trying to learn more about multifamily, as far as like being a general partner themselves. Investors, I would recommend investors if you're wanting to know a little bit more about how we look at deals and how we analyze deals. So I recommend the investors come in so that they could do better due diligence on the general partnership or investment that they're looking into and start asking some of the right questions. And if you've done multifamily deals before, I learn every time I join another group's presentation and see how they look at deals and how they, basically analyze the overall business plan. I take away what these other groups are doing. So even if you've done multifamily deals before and are looking to continue to learn and grow yourself, it's perfect for you as well. So everybody from A to Z that's been in multifamily, you're welcome to come and learn some more.
Yeah, and I'm glad you brought up the LPs of passive investors, because one of the things we do at CPI Capital is we'll acquire these large apartment buildings, that cash flow. We bring in our investors who invest their money with us, and we do all the hard work. So you're not dealing with tenants, you're not dealing with clogged toilets, you're not dealing with any of that stuff. That falls on our shoulders. Well, that falls on Paul's shoulders, who has to deal with that type of stuff.
Right.
So, as a Canadian, you're able to write a check, invest that money. We take care of the cross-border, all the headaches with that, and you're able to invest in U.S. apartment buildings. And if you're an American investor, you can invest directly into our opportunities as well. But as a passive investor, one of the things we see all the time is, somebody, they like the idea of investing in real estate, but they don't understand how the deals actually make money. And sometimes people can end up in a deal that doesn't go the right way, but the red flags were there up front. They just didn't know enough. So we're really big on education and giving you the tools as somebody who's possibly considering investing with us. We want to give you the right tools so you can make the most educated decision for yourself and your family. So Paul, maybe as a passive investor and as an LP, what kind of things should somebody be looking for as an LP to make sure they're entering the right investment opportunity for them?
Well, it's first for an investor to know what they're ultimately looking for. Are they looking for wealth preservation? Are they looking for cash flow? So the investor has to basically ask themselves, what is it that they need in this point in time in their investing career? And then basically reaching out to the different syndicators or groups that are doing those specific type of deals that they're looking for. So, if you're a new investor and just want to get involved in, in your first multifamily deal, I'd recommend looking at a group or a type of deal that has really cash flow, something that's pretty stable and in as far as like a good cash flow that's starting off and say like a 6 to 7% cash on cash return range, but not an overly aggressive business plan that you may not understand the ultimate risks. So trying to find more of like a stable cash flowing property is a good place to start. And then you can get to know more about what your overall appetite is and risk tolerance is, because there are deals out there like a development deal. It takes a lot of capital up front and you're not going to see any cash flow for 3 to 5 years maybe. And then you get a big pop at the end, but that, a lot can happen in 3 to 5 years within a market. So your risk tolerance has got to be a little bit bigger. And there's also value add deals that are pretty ugly, hairy value add deals that, could be massive wins or just massive headaches for everybody that's involved. So, if you are just starting off, I'd recommend, trying to find those deals that are cash flowing from day one and in a stable business plan moving on up. There's lots of different deals and opportunities that are out there. So best to ask yourself what you're looking for. And then, when you're starting to talk to these different syndicating groups or offerings, just seeing what what their business plan is. Are they really aggressive on their market cap rate, on their exit cap, basically? Is it realistic? Are they being conservative in their overall exit cap versus their purchase cap and what the business plan is? So it's kind of understanding the market that you're getting into too, as and when I say market cap, what is the the average net operating income divided by purchase price to get your cap rate? What is the property going to be selling for within that 3 to 5 years? Does that make sense? Is it in line with other properties that are currently selling for that market cap or that price per unit? So I could go a lot more into other red flags, but those are probably the highlights that you want to look for.
Yeah, and that's exactly what you're covering tomorrow night in your masterclass. So basically, once somebody's gone through your masterclass, they'll be able to look at an investment opportunity and say, okay, well, this is what looks good. This is what are some possible red flags. They'll be able to ask more questions, get the information, the data they need to really figure out if it makes sense for them or not. So, and Paul, you mentioned, Robbie, can you throw the link up again? So we've got the link. So if you are interested in attending Paul's masterclass, just go to the link right now on the screen and you can sign up. It's Paul tomorrow, Tuesday at 7 p.m. Eastern, right?
Correct. Yep.
Yep. All right, beautiful. So I guess, Paul, you mentioned that. Robbie, we have a question. Yeah, let's do a question. Do you have your mic, Robbie?
No.
Oh, okay.
His name is Petru.
Okay.
Do you do any seller financing deals?
Okay, Paul, we have a question. So the question is, do we do any seller financing deals? So maybe first of all, can you just cover what seller financing is, and then we can go into if we do those or not.
Sorry, my internet cut out just for a second there.
Oh.
Were you asking about seller financing and if we do
Yeah,
any
yeah.
of those deals?
We had a question come in. Somebody was asking if we do seller financing deals. So I was just seeing, maybe can you break down what seller financing is, and then we can go into whether or not we do that.
Yeah. Yes, we're open to doing seller finance deals. And there are those opportunities that are out there. Normally, when you're dealing with larger properties, you're dealing with more sophisticated sellers, and in sometimes more sophisticated business plan. But those opportunities still exist, especially if they're in a situation where maybe they have bad leverage or bad debt involved on the deal, and looking for creative ways to get out of it, get out of the deal. Where we could come in and basically take over and keep the seller in on the deal in some capacity, either as a general partner or a limited partner. But there are definitely some creative ways that you could get to do what you call quote unquote seller financing. So lots of various ways to keep them in the deal and to make it work. And in fact, we do pitch that every once in a while to a seller that might be selling a deal that might be in a tough situation. And instead of exiting out, and just taking the cash, we can offer them a position within the LP or GP position, being able to secure it at a lower, basically discounted price. But then it all comes down to, what's currently in place for your lending. Do you need to set up new lending? Is there, are they taking on, a good example is there was a hurricane that just went through Florida, and a lot of the, there's going to be some good repairs that are needing on a lot of these properties. And there might be sellers that were, or owners that were initially looking to sell their properties. And now that they've got hit pretty hard, they may not have the capital to do the initial, say the overall insurance deductible to cover that. Like it might be like $1 million deductible. And they just don't want to deal with the headache of, managing the repair process, the insurance process. And in fact, you could come in and say, hey, we'll come in, we'll keep you involved in the deal. We'll still get you an exit price or an expected amount of out.
Oh, we lost your internet for a second, Paul.
Yeah, sorry about that.
Yep,
but yeah, I was getting back basically to the closing point there. But yeah, there is definitely some potential there with seller financing.
For sure. And with commercial real estate, that the deals that we're doing, you can get pretty creative in how you put those together. And we're always talking about different ways you can make deals work. And the whole foundation of that is the underwriting and the deal analysis. You have to know your numbers before you can get creative with the deal, which is why, if you're an experienced operator, check out Paul's underwriting masterclass, because Paul, like you said, you want to kind of see what everybody else is doing. But if you're brand new and you want to acquire your first, your second, your fifth deal, check it out. Also, if you're looking for passive investing, check out Paul's masterclass. So the link's right there on the screen. Check it out, totally free. And Paul is the absolute master when it comes to underwriting and understanding how deals work. So Paul, really looking forward to your masterclass. I think it's going to be jam-packed full of value every time you do these. It's fantastic. All right, so we're losing Paul's internet. So anyways, so check out the link. Sign up. It's tomorrow night, 7:00 Eastern Standard Time. And so you'll be joined by Paul Hopkins, our Director of Acquisition. So Paul, thanks so much for coming on. Really appreciate it, and look forward to seeing you tomorrow.
Sounds great. Thanks for having me on, and sorry for the internet issues. But at least it happened at the end. So.
Yeah, all good. Awesome. So sign up, totally free masterclass, And I'll be seeing everybody tomorrow for that. All right. Talk to you guys soon.